including the Chinese automakers Li, Xpeng, and Nio, all falling this morning after the European Union launched an investigation in a bid to ward off the flood of what it says are cheap imports. The head of the EU's executive arm says the price is being kept artificially low by huge state subsidies in China and that it is distorting the market. Interesting here. Sort of as we get all of these back and forth trade tensions between China and other nations.
Plunge, expansion, and investigation. It's clearly a dynamic time in the electric vehicle market, with recent data showing a significant 42% plunge in European BEV registrations. There's a lot of movement to track. Nio has also seen its stock performance affected by these shifts. What does this mean for the future of EVs and Nio's place in the market? Earlier this year, European Union battery electric vehicle or BEV registrations took a hit, causing Nio's stock to dip. The numbers revealed a significant decline of 42.3% month-over-month, though there was still a notable 29% year-over-year increase. Germany and France, as the EU's largest BEV markets, were primarily responsible for the month-over-month decline, with BEV sales dropping by 59% and 46%, respectively. Data suggests a global slowdown in EV sales, with January witnessing a 26% decrease from December but a substantial 69% rise year-over-year. In January, EVs comprised 47.5% of all new passenger car registrations in the EU, down from 53.3% in December. However, new CO2 limits set for the EU next year may bolster BEV sales as automakers prepare for the change. In China, Nio saw a decline in insurance registrations, likely due to the Chinese New Year festivities. Despite delivering 10,055 vehicles in January, marking an 18.2% year-over-year increase, this figure significantly dropped from December's 18,012 deliveries.
Tariffs that are imposed on Chinese EV imports or car imports generally. For Europe, it's 10%. For the U.S., it's 27.5%. So Chinese automakers have taken advantage of that by exporting more cars to Europe. Now, I was just looking at some figures quoted by CNN from the China Passenger Car Association. 350,000 electric vehicles from China imported into Europe in the first 9 months of the year, first half of the year,
Now, Nio and other Chinese electric vehicle manufacturers are also facing a significant challenge as the European Commission launches an investigation into potentially imposing punitive tariffs on Chinese EV imports. The investigation stems from concerns that these imports benefit from state subsidies, resulting in artificially low prices that undercut European producers. European Commission President Ursula von der Leyen highlighted the issue, emphasizing the need to protect EU producers in the face of flooded global markets with cheaper electric cars. The investigation, which could last up to 13 months, targets battery-powered cars from China, including non-Chinese brands produced there like Tesla, Renault, and BMW. What's notable is that this investigation is initiated by the European Commission itself rather than in response to an industry complaint, reflecting the gravity of the situation. Tensions between China and the EU are on the rise, partly due to China's closer ties with Moscow following Russia's invasion of Ukraine. The investigation underscores the broader geopolitical implications of the EU aiming to reduce its dependence on China for materials and products essential for its green transition. Meanwhile, Chinese EV makers such as BYD, Xpeng, and Nio are ramping up efforts to expand overseas, particularly in Europe, as competition at home intensifies and domestic growth slows. The surge in China's auto exports, up 31% in August according to China Passenger Car Association data, reflects this push. Despite the challenges, Chinese EVs are gaining traction in Europe, with China's share of EVs sold in the region rising to 8% and projected to reach 15% by 2025. This growth is fueled by prices typically 20% lower than EU-made models, with popular Chinese brands like SAIC's MG and Geely's Volvo making significant inroads into the European market. Moreover, Chinese NEV or new energy vehicle stocks took a hit following the EU announcement. Before the news, BYD shares had traded 4.5% higher but closed down 2.8%. Similarly, Nio saw a 1% drop and Xpeng experienced a 2.5% decline. In Europe, carmakers like Volkswagen, BMW, Mercedes-Benz, and Stellantis initially saw a slight increase in their shares but later retreated from most of the gains. The influx of cheaper Chinese electric vehicles has prompted European carmakers to react. Renault, for instance, announced plans in July to cut production costs for its electric models by 40%. However, they face intensified competition from Chinese imports and U.S. rival Tesla, which has been slashing prices despite impacting its profit margins. While the German VDA Auto Association urges the EU to consider potential repercussions from China, European leaders emphasize the importance of supporting their own EV industry. Ursula von der Leyen emphasized that Europe welcomes competition, but not at the expense of sacrificing environmental goals or repeating past mistakes, such as the downfall of the solar panel industry due to Chinese imports. The EU investigation into unfair subsidies targets various aspects, including prices of raw materials and batteries, preferential lending, and land provision. Chinese state subsidies for EVs, totaling $57 billion from 2016 to 2022, have helped China become a dominant player in the EV market. Despite ending subsidies in 2022, local authorities in China continue to offer incentives to attract investments and consumers. The founder of NIO cautioned about potential protectionist measures from foreign governments, citing a cost advantage of up to 20% for Chinese EV makers due to their strong grip on the supply chain and raw materials. Additionally, Chinese producers benefited from lower EV battery prices than the global average in 2022. But there's good news for NIO as it plans to expand its market reach by introducing its more affordable Firefly brand in Europe by 2025. The Firefly and Alps brands will cater to families, with Firefly focusing on smaller models. Details regarding pricing for these brands are yet to be disclosed. Amidst the competitive market and increasing losses, NIO is strategizing to stay afloat. Facing stiff competition from Tesla and responding to market dynamics, the company has implemented measures such as workforce reduction and exploring partnerships. Collaborations with Geely and Changan Automobile aim to develop new technologies and reduce production costs. NIO's move to launch the Alps brand in China reflects its ambition to capture a broader market segment. The Alps DOM, an all-electric SUV with battery swap support, is slated for mass production in the latter half of the year. Positioned in a crowded SUV market, NIO aims to differentiate itself through innovative features and competitive pricing. But before we move on, we just want to thank you for watching this far. Now, let's zoom in closer to NIO stock, a hot topic on Zacks.com lately. In the past month, NIO's shares have shown a modest return of plus 1.3%, lagging behind the Zacks S&P 500 Composites plus 5.2% change. However, within the Zacks automotive foreign industry, where NIO falls, there's been a notable gain of 13.5%. A crucial factor in assessing the future trajectory of a stock like NIO is the revisions to its earnings estimates. Zacks prioritizes analyzing these changes, as they often signal shifts in a company's fundamentals. NIO is expected to post a loss of 51 cents per share for the current quarter, with a slight uptick in consensus estimates over the past 30 days. Looking ahead, analysts project a mixed bag for NIO's revenue growth. While estimates for the current quarter suggest a slight decline of minus 1.9%, forecasts for the next fiscal years show promising increases of plus 10.4% and plus 43.2%, respectively. Examining NIO's recent performance, the company reported revenues of $2.61 billion in the last quarter, marking a robust year-over-year growth of plus 43%. However, its earnings per share fell slightly short of expectations, indicating room for improvement in profitability. Valuation is another key aspect to consider. NIO currently receives a Zacks Value Style score of C, suggesting it's trading at par with its industry peers. This indicates that the stock may not be undervalued or overvalued. While NIO's recent performance and future prospects present a mixed picture, its Zacks rank number 2 suggests potential for outperformance in the near term. So, do you think NIO is poised for further growth, or will challenges hinder its trajectory? Share your thoughts in the comments section below. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about NIO in Europe, just click this video right here. Thank you for tuning in and stay tuned for more exciting content in the future.